Hey there, it's Casey. I'm here at TaxSaleAcademy.com and welcome to our weekly question segment. This week's question comes to us from Micah. It says, Casey, I've come across a few condos at tax sales. Any issues with buying these? First off, Micah, thank you so much for your question. So like anything in this business, it all comes down to research. As with every piece of real estate at a tax sale, you can certainly make money if there are no issues. Of course, the problem is that there are often issues, namely property-related issues in this business that can kill your investment. So let's take a look at just a few of these issues, most notably on how they impact condos. The first one are going to be the dues, the monthly dues, and this is multi-layered. First, you need to review your state's laws to determine which dues you are responsible for as an investor. Generally, you'll be responsible for the dues from the time of purchase moving forward, but in some areas, it'll be from the date of the foreclosure. And that difference there can mean quite a bit of money that you are left paying. On that same token, you need to find out what the dues even are in the first place. Some of the dues for these places can be absolutely mind-blowing, especially the ones where you see multiple condos available in the same condominium complex at a specific auction. If you have 30 condos available at one auction, odds are it's because of the dues or some other issues. Now, that might even be the reason that they hit the tax sale in the first place, simply because between the taxes and the dues, the person did not want it. $1,000, $2,000 per month might not be far off for a lot of places at the tax sales, which you have to figure out, is it going to be worth that investment or not? If you're planning on holding the property for a while, that's going to add up incredibly fast. And like most things, abnormally high monthly expenses will impact the end user's desirability, which of course impacts your price and ultimately your margin. So keep that in mind. It's not uncommon to see super cheap condos come with extremely high dues. Another one that you need to be aware of are special assessments, and these can total well into the thousands or tens of thousands of dollars. So a special assessment is a fee charged by the county or city to reimburse them for something that has been done to the property. So for example, the city comes in and replaces all the water lines or the sidewalks or the roads or whatever it is. Those assessments can become your responsibility. Another example is an HOA assessment. So instead of the city or the county assessing you, the HOA has a special assessment. For example, the pool had a sinkhole develop underneath it, and now you have to pay to fill that sinkhole in and rebuild the pool. The HOA, of course, does not have those funds in reserve, so they charge the condominium owners, and you could be left paying for that. The last major one I want to discuss is the stability of the association. And this is a massive one. There's a condo development in Florida where I've seen dozens of condos pop up at tax sales. On paper, they look okay. They actually look like they could be good investments. In person, you realize they're located in an abandoned condo complex, one that is frequently by gangs, where homes are ransacked, and a number of murders have occurred, and a place no investor would want to park their money. The issues trickled in over time and eventually became too much for the association to resolve. The result is many of those same units sold at tax sales have since been demolished by the city. Things like deferred maintenance should be a big indicator on how well the association does or does not operate. Retail values of condos is another big indication. If you look on Zillow, look on Realtor, and you see these condos that are selling for $5,000, $10,000 on the open market, that should be a massive red flag. Micah, all this to say that when you're dealing with condos, it's so important that you also understand there's another level of due diligence required. Research the unit, the prices, yes, of course, but also you need to research the community, the dues, call the county to see if they have any issues there. All this kind of stuff is paramount for your success in a condominium investment. Can they work? Absolutely. Just be diligent and thorough in your research. Hopefully this helps. For more information on tax sale investing, make sure you check out our website at TaxSaleAcademy.com for our most comprehensive step-by-step training. Hey, take care, folks. We'll see you next time. Bye-bye.